Hey everyone, welcome to this video. I'm Ishan and today we'll be talking about investing. If you are a college student, this is a really interesting field that you should learn a lot about. You should start investing when you are 18, 19, as soon as you can, right? That's what I have heard other people say. We'll talk about how to get started with investing, what are the tools that you need to use, what are the things that you need to keep in mind, where can you invest. All of these things we'll be covering. थोड़ा सा बड़ा video होगा, but make sure that you watch this video completely. If you have some pen and paper lying around, थोड़े से notes भी कर लेना. Like if you think something is important, just note it down. Misinformation नहीं होना चाहिए. That's the worst thing that can happen. Please watch this video properly, understand everything that I'm saying, and then you can get started with investing. So first of all, let's talk about who am I to talk about this. Who am I? What have I done that I'm talking about this topic on this channel? I'm a 19-year-old. Okay, I recently started investing when back in September of 2020, and I invest in mutual funds. I invest in normal stocks, and I'll just be talking about my experience and a few things that I have learned. I have read some books, of the most popular investors out there. I have watched a lot of videos from, CAs and all that. So I am just speaking from that experience, right? Now, my experience can be limited. You can have different experiences. You can have different perspectives. That is completely respectable. You don't need to do exactly what I'm telling you to do, but just understand this is what I feel a college student should be doing. Make sure that you hit that like button before we get started. But now that you've done that, let's continue. All right, with that said, let's first of all talk about why should you be investing. Now, I have made a video in which I talk about why you should be making money as a college student. Take a look at that video if you are interested. But basically, I just talk about this concept of compounding, right? It's really interesting. Basically, the thing is this: if you invest 100 rupees when you are at the age of maybe 20, by the time you retire at the age of, let's say, 60 years, in the span of 40 years, that 100 rupees actually ends up becoming around 450 times its current value, right? So 450 times what it is currently worth. If you take into account about 10% interest rate compounding over 40 years, that's what you end up getting. That is a huge number. And exactly if you do the same thing when you are at the age of 25, you have 35 years left. That will only amount to about 300 times, right? It is an amazing way for you to grow your wealth that you have over a span of time. And let's talk about a few things to do before you start investing. First of all, you need to have some sort of a security fund. Okay, now I have talked with Gaurang Sanghvi sir, also known as Ask That Finance Guy on Instagram. And he says that you need to make sure that you have this security fund with you, right? First priority should be to grow this security fund. How much this should be? This should be about 6 months of your current monthly income, right? So just make sure that you have at least that much amount in your bank account before going out to invest anywhere. Life is uncertain. We don't know what might happen tomorrow. So just make sure that you have that security fund with you. The next step is to clear your debt first of all, right? So if you're a college student, the biggest thing that you can do is to pay your own college fees. If you are doing freelancing, if you are getting to do some internship, whatever you're able to earn, you should always try to clear this fees that you have, that you are paying to the colleges. Make sure that you pay off the debt first of all before doing anything else, right? That's the most important part. You should always clear your debt first, and then once you have paid your college fees, once you have the security fund with you, now the next step would be to ask yourself a few questions. Number one question is, how much risk can you actually take? What is your risk appetite? The next question to ask yourself is, what is your patience level? Are you patient enough, or do you get influenced by hearing from the news or from hearing from your relatives or from your friends that what is the best investment to make? If that is the case, then you should probably not invest into more risky assets, because it's really important that you use your own brain. The next question to ask yourself is, can you invest for the long term, right? Do you have this capacity to delay the gratification and to just wait patiently for the time to pass and the compounding to take its effect? You need to ask these questions to yourself before you do anything else, right? Once you have asked yourself these questions, now let's talk about the types of investments. Where can you actually invest? I have written some notes over here, so I'm referring to that if you're wondering. But anyways, where all can you actually invest, right? So let's talk about this. First of all, let's talk about the most secure ones, and then we'll go to the more risky ones. The first thing that you can do is that you can get yourself like a fixed deposit, right? Many people say that you should get yourself a fixed deposit from your first income, or you should only invest in very secure assets. I don't really believe that. I have different mentality. I believe that this is the time that you can take massive risk, and if things don't work out, you would still be having a lot of time to start earning money again, right? So it's important that you understand that. But yeah, that's just my own personal point of view. You can have different perspective. It's completely all right. The next investment that you can make would be gold, right? Gold is seen as having a store of value. That's what people always resort to whenever there is some recession, whenever a lot of people see that the market is tumbling, they always go and invest as much as they can into gold. That's one thing that you can invest into. The next part is mutual funds and index funds, and then we have stocks, right? And then we also have Bitcoin. Now that is something that we'll talk about in this complete video, how to invest in all of these things. Where do you actually get started? Make sure that you hit that like button before we get started. But now that you've done that, let's continue. Now there are two methods that you can invest. There is something called as passive investing. Then you have active investing, in which you are actively studying all of the businesses. You're putting in a lot of time. You are reading their balance sheets, and then you're making a calculated estimation or calculated guess that you should bet onto this company. That is called as active investing. If you have the time, go ahead with it. If you want to read some books to know more about it, there's an amazing book that is called as One Up on Wall Street by Peter Lynch. Another book is Dhando Investor by Mohnish Pabrai. Amazing books. They are available on YouTube as well if you want to listen to the audiobook version. Take a look at those books. But now let's talk about passive investing. Okay, this is what a lot of you will be doing. This is what will be the best option for most of you, because again, we cannot be studying the market, the businesses too much, because again, we have other things to do. A lot of you are into coding, a lot of you are into designing, freelancing, and all of that stuff. So you need to do passive investing. What can you do for passive investing? Well, you can invest into stocks if you are confident enough that you can do that. Next, let's talk about mutual funds and index funds, right? So what happens is that mutual funds are a way for you to invest in a lot of companies, in like a basket of companies, and this can be a great way for you to get started. I remember back in September, the first mutual fund that I bought was Parag Parikh. That was the first time I invested. I invested about, I think, 3,000 rupees into that mutual fund. It was really amazing, and so far I've invested a lot more into it. But yeah, that's what you can do. You can start investing with mutual funds if you are in college, if you don't know anything about the markets, if you don't want to spend the time to study about them, then find great mutual funds. Okay, but there's one really interesting thing. What happens is that 80% of the actively managed mutual funds are not able to defeat index funds that you have, right? What are index funds? Index funds are basically based on an index. What is an index? Well, basically you have Sensex index, then you have Nifty 50 index, right? These are stock exchanges, and index is basically tracking exactly the growth of Sensex or, for example, Nifty, right? The best part about it is that it invests into the top 50 companies in case of Nifty, in the top 30 companies in the case of Sensex, right? The best part about this is that these companies are too big to fail, right? These are blue chip companies. These are the biggest companies of India. And so basically when you invest into these index funds, at the end of the day, you are betting on the future of our economy. You're betting on the future of India. What do you think the economy of India will be? Will we rise or will we actually decline? That is for you to decide. I personally believe that we will do a lot better in the future, so I invest in index funds. Now let's talk about what application can you use if you want to start investing. I personally use Grow for mutual funds and index funds. This video is not sponsored, by the way. What all brands I'll be talking about, these companies and brands are not sponsored. I have not sponsored my channel, so I'm just talking from my own personal experience, what I have experienced as a customer. I made my account on Grow. It was super simple, and I started investing, and that's what I used to invest into mutual funds and into index funds. You can do the same. The KYC process is very simple, and then you can get started with investing. Now let's talk about stocks. If you want to directly invest in stocks, right, then I think a great way for you to do that is going to be Smallcase, right? Smallcase is a company started by Zerodha, which again is a discount brokerage firm. And then you also have Upstocks. You can take a look at both of them. I have my Demat account with Upstocks, so you can take a look at that. But basically, Smallcase, what it does is that it is similar to mutual fund in a lot of ways, but there is a distinction. The distinction is that you get to decide if you want to keep that company into that small case or not. Small case is just like a basket of stocks that they have, right? Let's say there is one plan called as Dividend Stars or Dividend Aristocrats. These are companies that have been paying out dividends from the last 10 years, right? So you can invest in these companies directly using this small case, or it depends on you. If you want to include some other company, if you want to take out some company from that basket, you can do that. That I think is a great way for you to choose which company is better. If you have some knowledge about it, then just do it. If you don't, then just let it be. Just invest into that particular small case and let it grow, right? So that's what you can do. You can use small case. I think that's a great way for you to start investing. There are multiple small cases available based on your risk appetite, based on what theme you want to choose. Let's say in the future you think that the technology sector is going to boom in India. If you think that, then you can invest into the technology small cases that they have. And it depends on you. Whichever field you think is going to be blow up in the next few years, then you can start investing into that as well. So that is what I would say. Start investing in index funds, start investing in mutual funds, or if you want to take a little bit more risk, then you can start by investing into these small cases. Okay, take a look at all of these. Link would be in the description. These are not sponsored. That's just what I feel you should go after. Now, another thing to understand is that you can start investing into SIPs, right? So what is an SIP? Well, basically you can think of it like this. Every single month you'll invest some amount into that asset. That can be a stock, that can be like a mutual fund, that can be an index fund. And so you can just start investing over there, and over the term you would have invested a lot of money. Just do that. It automatically deducts your amount from the bank, and that's a great way for you to just make sure that whatever income you have, first of all the income goes off to the SIP, to the investment that you're doing, and then you get the remaining portion. Now, you know what happens when you invest into an SIP? You do something called as dollar cost averaging. People have this question that how can I time the market? How can I find that perfect time when the market is at a low and I can invest over there and I can reap the rewards afterwards when it goes up? Now, the answer to that question is that you cannot predict where the market goes, right? You just don't have the information. You're not like some Warren Buffett or something, right? So just make sure that you do something called as an SIP, and this is called as dollar cost averaging. What this means is that it doesn't matter what the situation is of the stock market, you just invest every single month and it averages out, right? So let's say you invest when the market is high, you invested. Let's say the market is low, you invested. Let's say the market is normal, then you invested over there as well. What it does is that it averages out all the profits and the losses that you might have, and it gives you a steady rate of return. Okay, so just keep this one thing in mind. One more thing to keep in mind is that these index funds charge very low fees. They charge about 0.1%, I think, which is amazing. If you take a look at some actively managed funds, they will be charging you a lot more. They'll be charging you fees depending on how big the mutual fund is, how big the AUM is, asset under management. It ranges between 0.5 to 1.5 as well. Percent actually of your total gains that you have. So yeah, that's just something to keep in mind. And it's really important that you understand these terms: exit load, P by E ratio. If you want to know more about it, watch the videos of Rachna ma'am. She makes some amazing videos on stock market. Her videos on stock market is what I use to learn about all of these things. So take a look at that. Another YouTuber that you can follow is going to be Pranjal Kamra from Phenology. He makes some amazing videos as well. So just search up on YouTube. You'll get some amazing videos and you'll get to learn a lot. So yeah, that's what you can do. If you want to talk about Bitcoin, let's talk about that. So Bitcoin is really risky right now, right? Because it is a lot more volatile. And if you get influenced by the daily fluctuations of an asset, then you should really not be investing into Bitcoin, because the way it works is that, let's say in the morning it is at 30 lakh rupees. Tomorrow or by tonight it can be like 23 lakh rupees. And that fluctuation can literally just play with your brain in a way that you can be like, oh my god, my money just got reduced by 10% or 20% in just one day. I want to get out of this. So yeah, I mean, if you can put in the money and you can just forget about it, then go ahead with Bitcoin. I would say that you need to research a lot about what Bitcoin is, what are altcoins, how can you invest in them. I personally use this application called as WazirX. Okay, this is a platform. It is like a crypto exchange of India where you can invest into these cryptocurrencies. and you can buy and sell, and that is what I use, right? If you want to use that, again, I'll be having the link to it in the description. Take a look at that. Basically, you can just invest a particular sum of your money into a Zerex, and that way you can start buying all of those cryptos that you are interested into. I would recommend you to only get Bitcoin or Ethereum. I personally invest into Ethereum and Bitcoin at about a ratio of 3:1. But make sure that you research properly about it. Don't listen the news. Don't listen to what I am saying. Watch some videos that are from people that actually know what cryptocurrencies are and how they work. Read some books. You can also read the white paper of Bitcoin and Ethereum. You will get to learn a few things from over there as well. But just keep this one thing in mind. If you're investing into Bitcoin, it can have a huge gain for you. And if the volatility bothers you, you should not invest into Bitcoin. Now you can also start investing directly into US companies. How can you do that? Well, basically, you can get this application called as Vested. Okay, that's what I have recently started using. And with that application, you can start investing into US stocks. It is very simple process. Just do your KYC verification, and once that is completed, you can start by even buying fractional shares, right? That's really interesting. So you can get the share of Tesla, you can get Apple, whatever companies you are a fan of, you can buy their shares. Again, link would be in the description. But yeah, I mean, that's just what I want to talk about. These are the ways that you can start investing whatever money you are earning right now. I know it might not be like a lot of money, but whatever you do have, I think you should definitely start investing that. But yeah, one more thing to keep in mind is that yes, these things are risky, but make sure that you research about them properly, right? I like to read a lot of books. I like to, just watch a lot of videos from people that actually know stuff. And that's how I got better with it. If you want to know a little bit more about Bitcoin, I have some videos linked in the description. Just have a look at them. I can make a separate video talking about Bitcoin. Let me know if you wanted to see that in the comment section down below. Make sure that you hit that like button. A few more things to keep in mind is how taxes work. Learn about what taxes are. Learn about the fees that these mutual funds and index funds charge you, and learn about what is LTCG, long-term capital gains, what are short-term capital gains. And one more thing that you might be thinking is should I do day trading? Okay, now I personally don't do that because I don't have the time and I don't have the power to keep thinking about where should I invest, where should I take out. I don't do any of that stuff. I invest for the long term, and that's what you should be doing if you are in college or if you're like a student. But yeah, guys, that's pretty much it. That was just a short video of me just talking about stock market. If you want to see more videos about this, let me know in the comments. I have not discussed all the things. I have not talked about stocks in detail. I have not talked about mutual funds in detail. This is just a brief introduction to all of these assets that you can start investing into. And it is going to be your job to tell me in the comment section below what are the videos that you want me to make next. Yeah, thank you so much for watching. And make sure that you also follow me on Instagram. I make a lot more resourceful content over there as well at Ishan Sharma 7390. Thank you so much for watching. Make sure that you hit that like button. Make sure that you share this video with your friends, and also make sure that you subscribe to this channel, and I will see you all in the next video. Bye bye.